Welcome to this lesson on stocks. I am Abhijit Jagdish from Kodkarikama. In a trading world, oftentimes terms like shares and stocks are used synonymously. Be mindful there are some distinctions between the two terms outside the trading world. But for the sake of this course, we will say stocks and shares mean the same. A share or a stock is a unit of ownership in a company or its financial assets. If a person holds a number of shares in a company, they are entitled to a part of the profit or value generated by that company. This share in the profit is proportional to the number of shares they own. Let's say a company ABC issued 10 shares in the market. Person A has 4 of these shares, person B has 5, and person C has 1. Here, person A, B, and C who owns the shares are called shareholders. Let's assume in the current financial year the company made a profit of $10 and it has been decided to distribute this profit among its shareholders. As explained before, the profit of $10 will be distributed to its shareholders in proportion to the number of shares they hold. So person A will get $4 for his 4 shares, person B gets $5 for his 5, and person C gets $1 for his 1 share. This payout to the shareholders is called dividend. In financial markets, the word share is not limited to shares in a company, but it also refers to an ownership in mutual funds, limited partnerships, and real estate investments. When a person holds shares in a company, then depending on various other things, they may also be entitled to vote on company matters. There are various types of stocks that a company may issue, like common stocks. These come with voting rights on company matters. Shareholders may benefit if the stock value goes high or take a hit if the value falls down. The next type of stocks is preferred stocks. They don't have a voting right like common stocks, but they get to claim the company's asset first before the common stockholders in case the company closes down. Preferred stockholders get set dividend on their shares at regular intervals also. They also usually get the money first before the common shareholders. Let's do a factual dose now. In 2006, 1/3 of all stocks traded in USA and European Union were traded electronically by specifically designed algorithms without any human input. Today, it is estimated that around 70% of the stocks traded in US and EU markets are done by algorithmic programs. Some markets push that number to as high as 80%. Just goes to tell how much we are dependent on computer these days for trading. Alright, with that, it's now time for a quiz. Which was the first company in the history of mankind to sell their shares on a stock exchange? And can you tell me in which exchange they sold their shares? Solution time. It was Dutch East India Company in the year 1602 and they sold their shares in Amsterdam Stock Exchange. That's all we have for this lesson on stocks. We discussed stocks, stockholders, dividend, common stocks, and finally preferred stocks. In our next lesson, we shall discuss capital and treasury stocks.